All right, so we're going to get right into it. So I think you guys can share my slides here and put me up here. So first of all, I appreciate the invite to speak here. Hope everyone's having a good day. I'm going to try to squeeze this one in 45 minutes because I know that I did this one before and it was just about an hour. So I'm going to go through a little bit fast, but I think you guys will really enjoy it. And this presentation I did at Luis's summit in Florida, and it was awesome. It was a great summit, by the way, great event. And it's basically why bot trading is dominating the options market. So I want to start off with a little bit of a story and like kind of background here just to kind of get you guys thinking in the right mindset. So imagine that you're walking into a casino, and this is usually what every single person looks like when they originally like first walk into a casino, right? They're super excited. They want to, they know, there's hopes and dreams of like winning a bunch of money, right? And the reality is that once you actually get into the casino, you kind of look like this, right? Where like money feels like it's getting sucked out of your pockets and out of everything, right? And this is no surprise to anybody, right? Anybody who's ever been to a casino, anybody who's ever been gambling before, like this is just what happens. Like it all starts really good, but then it ends, terribly wrong with all of your money getting sucked out. And this is because the house has an edge, right? Now, look, the funny thing is we instinctively know that this happens, right? Like we know walking into a casino that the house has an edge. In blackjack, the edge is like less than 1%. In European roulette, it's about 2.5%. In American roulette, it's about 5%. So we know that this happens. And it's just a matter of time that the house eventually wins and always wins money, right? So if you're going to play roulette, which is the wheel that spins with all the numbers, right? And it's got the black and the red and the greens. First of all, if you're going to play roulette, you play European single zero style roulette because the edge is less to the house. But just literally adding the double zero, of course, increases the house edge to 5.26%. And so what casinos know and instinctively do is they get you to the casino, make you stay, right? There's no windows. They pump oxygen. They give you drinks, right? They want you to stay and play. But intelligently, what they also do is they make you and force you to bet within a parameter, like a set of parameters. So like if you look at a casino, they don't allow you really to go and say, I'll do $10,000 on black right now, right? They don't do that because they know that the best way to get all of your money, because they know they have an edge, is to make you play over and over and over again. That's why they have table minimums and table maximums and table limits. They know if they have $10,000, the best way to get your money is not one roll, not one spin. So if you actually look at the roulette probabilities of winning, after one spin of the roulette wheel, you are likely to be behind the casino 51% of the time, right? So again, casinos know this instinctively as you go in, that in order for them to win, they have to get you to play 1,000, 10,000 times. That's why they limit your bets. They want you to spend your $10,000 $5 at a time or $10 at a time. Because after 100 or 1,000 or 10,000 spins, there's no chance that you're going to walk out of that casino with money. They know that they fully captured their edge, right? So the funny thing is that, of course, casinos make all this money. We know that this happens as traders, right? Like as traders and humans and just people, like we know going into a casino that they have all the edge and everything's favoring them, but yet we still go in there and do this, right? Well, casinos got smart because eventually, like way back in the day, and I think this photo was from like the 60s or early 70s, right? Way back in the day, casinos had this edge, but it was all human driven. And what I mean by this is that if you went to a casino 40 years ago, 50 years ago, right? There were mostly humans in that casino. Human like dealers were at the table dealing blackjack and playing roulette and doing all this other stuff. And what casinos eventually did is they started to migrate into electronic trading, even through electronic slot machines, even through and using slot machines. And then even the slot machine itself was very much a manual thing up until about 1964. So casinos had slot machines, which was just like one version of a game that had an edge. But in 1964, with the Money Honey, they eventually launched the first electronic slot machine, which was, in my opinion, truly a change because now at this point, you didn't have to have these people who tended to the machine, right? Like you didn't have to have people who ran around and, replaced coins and did all that stuff. Like, no, you had something that was more electronic. So it was this first gravitational pull to something more programmatic, more technology driven. And you saw this happen in casinos. So what happens now is that now you walk into a casino literally anywhere in the world and you don't see a bunch of table games. You don't see, that's kind of like the rare thing now. So you don't see humans dealing cards that often. I mean, obviously they're there, but the vast majority of casinos now and floor space is made up of these electronic gaming machines, these slot machines, right? And so if you look at the revenue of casinos, it went from essentially about 40% was generated through slot machines. I think it was like 30 years ago when I pulled these stats, right? And then now upwards of 70% of a casino's revenue comes from electronic gaming and slot machines. So the vast majority of money that casinos are making, and we should use this as like an analogy for where trading is going, is coming from machines that are playing games, right? So it has to make you wonder, and did for me, like it has to make you start to think, okay, like if casinos went through this progression and this like history, then is there the same history starting to play out in the options market, in the trading market? So let's go back, right? 1903, here's the floor of the NYSE, right? And at this point, this was all floor trading. You couldn't make an electronic trade. If you physically wanted to trade, you had to go down to the stock exchange and make a trade, right? And like think about it as a casino. Like if 40 years ago, if you wanted to gamble, you had to physically go to Vegas or a place that had a casino and walk into the casino. Hopefully there was another human on the other side of it, and you'd have to, gamble and place a bet. But now you can gamble on your phone, right? Like you can gamble online, you can do whatever, right? So now technology has completely disrupted that industry, and it's happening the same way in the options market, in the trading industry. So eventually, and I know Lex, we talked about this the last one, Lex, I think he actually had a Quotron, but eventually you had this thing called a Quotron, which replaced the ticker tape. The ticker tape was a real thing where like the tape would actually come out of a machine of all the stock prices. Well, that eventually got replaced by this thing called the Quotron, where you could type in a ticker symbol and then you could get digitally the ticker, like the value of that security. Now, if I put this in front of a regular trader these days, you guys would, your heads would explode, right? Like having to type in the symbol for everything you wanted to look at. But imagine that's what you had to do. And that was, again, another progression of this technology that's disrupting the industry. And then you had the first electronic exchange in 1971 with the NASDAQ, of course, and that changed everything again. That was like another huge point. I would say that this was similar to the point in which casinos started to launch the Money Honey electronic slot machine, like a very similar thing where now all transactions could be done electronically. So fast forward all through that time, and even since then, everything that's evolved and all the sweet computers and technology and everything we have and all the new graphic interfaces, the harsh reality of trading is that you're still the bottleneck. So really, in our opinion, not much has happened between 1971 and today. Yes, you can trade mobily, you can trade at your computer, you can log in from places, but you're still the bottleneck of your trading strategy and your system. And if you're thinking to yourself, I can trade mobile, well, now you're a mobile bottleneck. So it doesn't really matter that you have the ability to pull up a stock chart on your phone now, because if you don't log in, if you don't look for the symbols, if you don't look for trades, it doesn't happen as a retail trader. And so you've become a desktop bottleneck, and now you are a mobile on-the-go bottleneck for your own trading. If something happens to you and you forget, trades don't happen, right? And this is a problem. So what we need to do is we need to continue down this path of disruption, and that's where I think bot trading and automated trading has been and is going, is because it's the natural progression of what is going to happen and already happening in this industry. It's just going to become even more prevalent in the future. So what happens with disruptive technology is that the first thing that happens, and this is like that number one here, is that technology overshoots your needs, right? And that's kind of where we are at this point. It's like there's so much technology, but it's overshooting our needs. Like there's not much that's really improved things with most legacy platforms. And so you get a lot of incumbents that are improving, sustaining technology. I mean, some of the biggest platforms that have been around for a decade and a half have legitimately not changed at all in that time period. And so nothing has happened. It's just a different skin or a different layout or a different UI experience. But the actual mechanics of trading really hasn't changed. And so it's not until you get a disruptive innovation that kind of breaks through that you start to see people being forced into adoption. And I would argue to say that eventually that forced adoption is going to get faster and faster. And this is what happens all the time with all technology, is that eventually, like slowly things happen, and then suddenly it becomes the new norm in the future, right? So remember that disruptive technology doesn't change what needs to be done. It streamlines the process by which it's accomplished, and it removes inefficiencies. And this is so important. This is not saying that bot trading changes what needs to be done or automated trading changes what needs to be done. Rather, it's going to streamline that process by which it's accomplished and remove inefficiencies, namely human inefficiencies that we just can't overcome, right? So to give an example of this, like Blockbuster and Netflix, or Blockbuster and any streaming service, I remember going to Blockbuster as a kid, having to rewind the videos. And like if we wanted to rent a movie, we had to go and kind of hope that the movie was there. Then we had to drive it home and then watch it, right? Like I still remember doing that. But here's the thing, when streaming services came out, like Netflix and whatever, it didn't change what people wanted to do, right? Like we still want to watch movies. We still wanted to rent movies. But what it did is it made it easier and more efficient and removed inefficiencies, right? And now it's at scale. Like now, legitimately, everybody has a Netflix account, right? I would assume. But originally, when it came out, even in the early years, not everybody had a Netflix account. It's kind of like, oh, yeah, my friend has one. But now everybody has it. It's standard. Actually, most people don't even have TV. They just have a Netflix account, right? So that's the slowly, and then suddenly it's going to become the standard moving forward. And so I would argue that if you like objectively look at most platforms out there, like seriously look at most trading platforms out there, what has seriously changed in the last 5, 10, 15 years? Everything is the same way to execute a trade, which is that you as the trader, as the retail person, have to log in, have to find a symbol, find an option strategy, find a chart, pick something, right? Like there's so many things and you have to do it, right? And if you don't do it, then it doesn't happen. And so, new platforms that have better looking, graphics and UI elements and user experiences, that's awesome. But it hasn't actually changed the process of trading. So I would say that the bots are the next evolution, and they are the next evolution. They're the next evolution of trading, just like slot machines and electronic gambling was the next evolution for casinos, right? That's what's going to happen. And it's this shift that is going to happen and already happening between the manual way of doing things, which is very time consuming, very expensive mentally, right? Error prone, inefficient, to a new automated way of trading. And we've already seen this start to accelerate. It's just going to get faster and faster. And so here's a chart of the algorithmic trading market by size. And you can see that even in 2018, 2019, it was already $11 billion. 2024, it's expected to be upwards of $18.8 billion. So electronic and algorithmic trading is continuing to move at a really, really fast pace. And so if you're not on board with this, you're going to miss a huge opportunity to get ahead of the curve here and to jump in at the ground level. And so let's take an example here just because I want to show you guys a little bit about this. And this is a chart from before that I used in the presentation, but let's just say you're looking at some stock and you have some indicator that tells you that you want to get into a bullish or bearish trade or whatever the case is. It really doesn't matter, but you find something and you want to trade it. Your process of trading right now as a trader looks something like this. You go to your favorite broker platform, right? And you type in the ticker symbol, and then you're presented with a list of all the different expirations. Now, here's your first roadblock is you have to choose what expiration you want. Do I want 0 DTE? Do I want 10 days, 30 days, 40 days, whatever the case is? How do I know which one's better? There's all these numbers here, and some have weeklies, some are not weeklies. I've heard that monthlies are better. I've heard that weeklies are better. Everyone trades 0 DTE, but I don't know if I should do that, right? Like there's no objectivity to this. It's just subjective picking and choosing. I heard from somebody that I should do around 30 days. So maybe I pick 30 days, right? Okay. So you go in there and you say, all right, maybe I pick 7 days or 30 days, whatever it is. Now you open that option chain and you do it on your phone, you do it on your desktop. It doesn't matter. You open that option chain. Now you have all these different strikes to choose from. Again, you're presented with the same thing, which is what the heck do I do here? Like, what do I trade? Do I trade at the money, out of the money? Like, do I do a 30 delta, a 50 delta? What do I do? Do I do an iron condor? Do I do an iron butterfly? There's so much choice here, and you are the bottleneck of all this choice. And so even if you do that and you get to this point, you say, okay, I heard that I should trade, whatever it is, a 15 delta call spread. Great. So I'm going to trade a 15 delta call spread. You load up that position on your broker platform. they might give you a couple little data points. Like they might give you the probability of profit, or they might give you the days to expiration or something, right? That in and of itself is not enough to make a trading decision. And that's the problem that a lot of traders face, is that although they might get to that step of finding something they like, right, and feels good just on a gut hunch or an opinion, right, an emotional opinion, they don't actually know if it's a good trade or not. And they can't, because they can't analyze it as fast as a computer can analyze it. So if you take this same trade, right, or well, here's the deal, right? If you're doing this right now, you're Blockbuster. Like you are literally a Blockbuster trader. That there's going to come a time where you don't exist anymore, because things are going to move so fast that this older way of doing it is going to completely disappear, right? This manual, we're going to laugh one day and say, like, kids, I used to manually trade. I used to point and click, and I used to choose every strike. Like that is going to be something that we laugh about in the future, right? So you're Blockbuster. And the problem is that you're Blockbuster because this is your trading strategy, right? So in the comments, right, for sure, is this your trading strategy, right? This is kind of what it looks like. Sticky notes everywhere. You kind of have some things scribbled down. You really don't know what you're doing. You're just kind of like, I call it like the rodeo cowboy. Like you're just walking into the market every day, gunslinging, shooting at stuff, and just hope you hit something pretty good, right? Or if you're like me trying to describe my strategy before, like it looks something like this. Like it's a little, you're like, I need a cigarette in 15 minutes and I can kind of get you to where I am with my strategy, right? But if that's your strategy, you know that that's not sustainable, right? You know. So here's the reason why traders do this. And this is where it gets to like the whole ethos of what we believe at Option Alpha, which is that you have these two parts of your trading strategy. And right now as a trader, you're using one side of your mind, one side of your brain, which is your mind. I call it the mind side. This is market intelligence and nuanced decision making. This is the rational, logical, strategic side. When people talk and write and podcast and do whatever, this is the side of your brain that you're using, right? If you were to describe what you do to somebody else, they would basically say, yes, I understand what you're saying. And you would describe it really well because you're using your mind. You're using the really smart, logical, rational, strategic side. And everything sounds really good and probably is like makes sense in your mind. The problem that traders have is that when they actually walk over to the other side to start executing their strategy, they hand off everything to the other side of your brain, which I affectionately call your fool. And your fool is the side of your brain that you allow to manage and execute your strategy. And it's frequently oblivious, it's an overestimator and a luck seeker, and it's inconsistent, brittle, and susceptible. This is the side that 99% of the time is managing your trades, right? We've all been there. We've all been, at the plate. Like we've all had all of the trading psychology, pitfalls and drawbacks. And that's because we have our mind that does okay, right? But then we hand off execution to the fool. And that's where we mess up. We hand off execution to the fool. And we believe that as intelligently as we could craft our beautiful strategy, we can as equally and as intelligently execute that strategy flawlessly in the market. So we've been there, right? I've been this person, like you've held that one little bad trade that you're still hoping turns around, right? Maybe some GME traders are actually those traders right now who bought GME a couple days ago or last week or whatever when it was up and they thought it was going to go up to 100 or whatever the case is. Like you're still holding on to that, right? But that's the fool inside of you. That's the fool who's now executing and managing the position. You can't rationally have an argument with that person, right? And the problem is, as traders, is that we are susceptible because we're humans to all sorts of cognitive biases and flaws, right? So like, here's a really funny one. Like, is this 3 or 4? But if you really look at it, like, it looks like 3, no 4. It looks like 3, no 4. Like, so even if we look at stock charts, like you might see something different than I see. And you might be like, that is a Head and Shoulders. And I'd be like, I don't even know what you see, right? So there's all sorts of these biases that we have to contend with all the time. Here's a really fun one. If you've ever done this one before, I did this at a live audience. A lot of people got this wrong, but are A and B the same color on this chart? So is the little block A the same as B? A lot of people would say no, but the answer is yes. They are exactly the same color, right? And it's that fast that I can trick your mind, myself included. Like you can trick your mind so fast. Here's another fun one. So are these two tiles the same color? You would say to yourself, absolutely not. They're not the same color. But the reality is they are the same color. So if you have like a blackout in between them, you can see that the faces of these two tiles are exactly the same color. Again, that's how fast you can trick your mind. Here's a really fun one. If you haven't Googled this before, you can Google it. It was a study done with these kids who were bouncing a basketball. I don't know if anybody's ever seen this before, but they were bouncing a basketball back and forth. And they asked participants in this study to just count the number of times that kids passed the basketball back and forth in this like short video clip. And I remember doing this in school originally when this came out, or like at some point it came out. And I remember counting and I was like, man, I nailed it. I got all the basketballs. I counted every single time that they passed it perfectly. But what you miss in this clip, if you've never seen it, is that during this study, they walk this dude in a gorilla costume right across the screen. And nobody sees it, because what you're trained on is you're trained to count basketballs. And so what the analogy is to trading is that as a trader, we're trained almost to a certain degree because we're humans and we just have a limited scope of, conscious energy and focus. We're trained on just looking for that one thing that we want to find or are trying to look for. And maybe we get really good at it, but we miss the proverbial 800-pound gorilla that walks across, right? Like, so we're looking for our one trade, but we miss a billion other better potentially trades because we just don't have enough conscious energy and like focus and attention to do that, right? Whereas a computer, a program, a bot can do that, right? So let's go back to this example before, right? Remember, this was the example, had an 83% probability of profit, which is cool. It sounds really good. Like maybe that's a good trade for you. If you take this trade and you now use it inside of Option Alpha, plug in that exact same trade into Option Alpha. Again, this is from before, but I took the screenshots literally side by side. So it's really good, a good comparison. You can see that inside of Option Alpha, we calculate about the same probability of profit, about 83%, right? So you're thinking, okay, this kind of jives. But the problem is that we also do massive statistical analysis and use computers and big data centers to basically run even more calculations than you could possibly run yourself or do in your head. And what this trade actually ends up being is it ends up being a negative expected value trade with negative alpha. And what that means is that although the trade on the surface looks like a good trade, when you use computers and technology to really dig into some of the numbers, it looks like this trade ends up being net a loser long term. And that's the difference between trading manually the old way and using technology as a tool and a resource to help inform new trading ideas and things you're going to do moving forward. Because now, if I look at this trade in Option Alpha, or my bots look at this trade in Option Alpha, then I know that this is a negative expected value trade, which means that there's not a good likelihood at all that long-term this trade ends up working out. I don't care that the probability of profit is high. It's just not collecting enough money when it wins to cover the losses when it loses, right? That's the difference in trading. And so when you're trading right now, you're trading against supercomputers who are basically doing this on the other end. And you have no idea this is happening because you're just sitting there trading. You're just like, I like RSI. I like this. I like all these things. I want a meme stock. I want a whatever. And you're just feeding the other side of this. There's no way that you could possibly continuously win in this market environment when your competition is mega supercomputers with unlimited computing capacity to really calculate what a good trade looks like or not. You have to have something comparable to level the playing field. And so what I want to get you to the point of doing is using your mind. I still don't want you to avoid using your mind. I think that's a misconception. It's like when people hear bot trading and automated trading, they basically think to themselves, oh, they're just going to do it. It's just going to be a trading machine, a little, gambling computer that does it. No. Like this is much more than that. You still use your mind. Use the God-given talents that you have for logical, rational, strategic evaluation of what is a strategy. That's what we're good at. As investors and humans, that's what we excel at, is that higher level thinking, right? But instead of offloading the execution to your fool, using your mind to then execute your strategy, why not offload the execution to bots? And in this case, bot stands for Better Operating Trading System, which is more data-driven and technical on the implementation side, or tactical on the implementation side. So yes, use your mind to do what you do well, and then offload the execution and management of that strategy to a bot. That's it. It's really simple. It's what casinos did when they said, we're going to create a game that has odds in our favor, and then we're going to let people play it on an electronic machine that we don't have to manage, right? So create a strategy that makes sense to you and then execute that strategy with a bot so that it's done perfectly, so that you can analyze that performance of that bot or that strategy or whatever, and then you don't have all of the pitfalls of being a manual trader and letting your fool take over, right? So to use an example and kind of walk through it, if you use something like Trade Ideas, which you can use inside of Option Alpha, instead of coming in and just randomly guessing when you walk into the market, no, you come into something that is doing the work for you and leverage that technology. In this case, Trade Ideas, what it does is it analyzes millions and millions of possible combinations of spreads. So when I took the screenshot, it was 41 million trades that were analyzed by noon, like it was 12:30 Eastern time, right? So if you can't analyze 41 million trades perfectly, then yeah, like how can you possibly choose what are good trades versus bad trades, right? So you use technology as something that you can lean on, that you can use to improve your trading. So you come into Trade Ideas, you come in here and you say, all right, I'm looking for a trade that is a credit spread trade for a particular symbol like SPY that's bearish with 7 days or more to go till expiration and with an expected value of $5 or more. So this is a completely different way of trading, because instead of going into the market just kind of picking and choosing, hoping and praying, you're coming in with an objective and you're saying, this is what I need. This is my criteria. I want this, and I want this. Now go find it for me. And that's what you're essentially doing. And so now you've got a very curated list of much better trading opportunities with expected values that are positive versus negative expected values from which to choose from, right? So maybe you look at this first one here and you're like, okay, this has a 62% chance of profit. The expected value is $5, right? So if I were to make trades like this long-term over and over again, I would expect, to make $5, per spread that I traded, right? So now you look at this trade and you say, okay, this is a trade that I could possibly make. You load this trade up. And now what you do is you throw this trade into a bot for automation and you let the bot take over the management. In this case, you can set things like exit options, which now you no longer have to manage the position at all. Like maybe you were part of entering the trade, but now you can let a bot take over management. Again, a bot is not doing anything other than what you tell it to do. You're telling the bot in this case, hey, take profits at 75% of the credit. So if I get to that point, then I want to take profits. I could also execute at the same time a trailing stop loss where I can say, hey, once I reach a 30% profit, start to trail that profit by 10%. Again, you can't do this as a manual trader now on any platform. You can simultaneously do all of these things in one single trade. Or you could say, hey, if none of these happen, 2 hours before expiration, close the position, right? So now your entire trading life cycle and all management is taken care of. You can take profits, you have trailing stop profits, and you have expiration taken care of, right? That's kind of like wrapped up in these very nice little exit options. Now, if you like all of that, you can have your bot auto trade that type of setup. You can manually do it. And we see a lot of people use Trade Ideas and Option Alpha just as an engagement tool, and then they get more comfortable with it. And then eventually they start manually trading it, right? And so now you can say, hey, bot, I want to auto trade this setup. And what you're doing at this point is you are now the instructor of a machine. That's it. Like, don't overthink what it is. You are now instructing a machine to do your strategy execution. And guess what? Your bots, they don't get tired, right? Like, they love crunching numbers. It's literally what they tell us they love to do, is like eat numbers all day, every day, breakfast, lunch, and dinner throughout the trading hours. They just work, right? And they allow you to instruct them and be the general of your strategy without having to dig through the market to find ideas. And so now when you go in here, you connect it to your account, you can set scan speeds, you can add other automations into your bot. And automations are just simply a set of decision criteria. Like, this is one inside of a bot that I run, which is basically this idea of like checking if the position that I'm about to enter is spaced appropriately. So like all of these decisions, you just have your bot make and you tell it what to do. In this case, what I'm doing here for this is I'm saying, hey, I want to make sure I ladder my positions at least 3 days apart. So for me, I don't want to enter a trade every single day. Maybe I'll enter a trade every 3 days. And then I have the bot check my beta exposure. And this is super cool because now you can have a bot do even more things than just find a position and get into it. It can analyze its own portfolio. So the bot can self-analyze and say, whoa, I've got too much bearish exposure, or I've got too much bullish exposure, and I want to add an opposing position. Or if I'm kind of perfectly balanced or pretty neutral, find an iron condor or an iron butterfly. Now you have something that is self-correcting to the market. It's adjusting itself so that it doesn't add 10 put credit spreads and then get crushed when the market reverses the other direction, right? And all you're doing here when you're telling it to find a new position is you're using this idea of shopping for a trade and telling the bot to go find trades that meet your criteria versus just randomly picking and choosing. So in this case, I say, hey, go find a put credit spread that's 20 to 45 days from expiration. And I want to get into one contract if you find it. And I want to do pricing 4 cents from mid price. So I'll allow a little bit of slippage. And my exit options for that trade will be set to 40% or 1 hour before expiration. The entire trading strategy is completely done and wrapped up in this. I don't have to touch anything. I don't have to manage anything. It's in there. You can also set additional criteria, very similar to how you would order a meal, or if you order something online, it's like, yes, I want this, or no, I want this. I think the analogy I gave before is like if you order a sub or a sandwich or food, right? You're going to say, yes, tomatoes, no ketchup, yes, mustard, right? You just do this for the same thing. Tell the bot, hey, I want only positions that expire before FOMC meeting, only positions that expire before the ex-dividend date. Make sure any position you get into has positive alpha and positive expected value per contract. Make sure its probability of profit is at least 60%, and make sure that the max loss per contract is less than $500, which for me is small, so I wanted to keep my position sizes small. So you're telling the bot, this is your criteria. You are allowed to find anything you want that meets these criteria, and once you do, you can rank it by whatever metric you want to rank it by. Again, what you're doing is you're instructing technology to work for you. You are not the bottleneck, right? You can do a ton of other things in here like add conditions, send yourself notifications, tag, open positions, close positions, right? It's completely up to you how you want to run it. Here's one that you can do for assignment risk. So if you're thinking, well, maybe I want to manage positions when they get close to expiration and there's a high risk of assignment. Well, before you would have to do that as a trader. Like you have to remember that the position is close to expiration. And then you have to remember, what does assignment risk really mean, or how can I tell? Now what you should be doing is just offloading that to a bot. Let technology do that for you. So here I basically say, hey bot, go through every position, and mine do it every single minute. So every minute it's going through my position, checking, is it less than 5 days? Is it less than 5 days from expiration? Is it less than 5 days from expiration? And they don't care that they check that often, right? But once it gets to less than 5 days to expiration, then I say, okay, yes, it's less than 5 days to expiration. Now I want you to check a set of decision criteria to check and see if I believe that it's at a high risk of assignment. Like, is the position's underlying price below my short put strike? Well, that would probably mean that I'm in the money and there's a pretty good chance that I get assigned, right? Well, now I can also check, is the short leg chance of being in the money greater than 70%, which means that am I in the money by a penny or am I in the money by $1? Like, is there a probability to that? And is the short put leg extrinsic value less than 10 cents? So am I in the money and all of the extrinsic time and volatility value that's in that contract has all of that been eroded away? And if all of those are true, it's not that I'm 100% going to be assigned, but I have a really high likelihood of being assigned. So I allow the bot to then close the position. So see what happens here is that if all of these are true, I tell the bot, yes, you may now close the position. This is a completely different way of trading versus you being the one that is the bottleneck to remember how to do this and when to do this moving forward. Or you could do something like this, like on specifically Fed days, you could tell the bot to send you notification that it's a Fed day. And you could adjust your profit targets to 90% for the 1 hour of time around the Fed announcement, just in case there's a wild swing. You basically give your bot more flexibility for that wild swing just in that focused like area of time, right? And so that's really cool. It's like that, now you can see like it's infinitely flexible what you can do. Tell your bot to send you a notification. It can self-correct, self-adjust strategies and profit targets and things like that, and then correct back to it if it needs to later on. So this is why bots are so cool, because they basically are like little machines that trade for you with all of your decision criteria kind of wrapped up in there. You can have switches in there so you can turn things on if you want to. You can set dynamic watch lists so that the watch list will update of like the most volatile tickers or an uncorrelated list of tickers or tickers with high RSI for the day. Like there's so many things that now you can leverage by using bots. So hopefully what you've seen is that what you should be trying to do, whether you do it with Option Alpha or try to do it someplace else, is should be moving from bottleneck to bot manager. So like you shouldn't be your bottleneck anymore. You should be a manager of these bots that are digging through trades and trying to find the gold for you, essentially, to use that analogy. And now as a trader, your dashboard doesn't look like a bunch of charts. What it looks like is an activity of what has happened during the day, like a performance activity of saying, like, welcome, good afternoon, Kirk. Your bot's opened 30 new positions today or closed positions or whatever the case is. And now you come in and you can view those positions and say, oh, great. It grabbed this XSP position with a 62% chance of making money and a high probability of profit or whatever the case is. Now you're a true manager of positions versus a hunter and gatherer of trades, right? So remember, mind, you still want to use that you can't avoid that. Like that side of your brain is super important. It is even more important because bots are going to be an amplifier of everything, right? But now offload the execution to bots moving forward. The reality is, if you think that this is an opportunity where you're like, yeah, that's cool, Kirk, I'll get to it later, I'm telling you, the roads are closing fast. So if you've come to this point now and you're watching, you're like, yeah, that sounds pretty cool, but it's maybe a little confusing. And I don't know if I want to go down this path, right? I'm telling you, the roads are closing fast. Here's why I know they're closing fast, because you're going to be priced into adoption. And what I mean by this, and this was taken as a screenshot from a very popular online broker, right? It's not Tradier, it's another popular online broker. When they don't do this, right? But another big guy, right? But look here. If you go in for broker assisted, so if you physically call and get the help of a human, it costs $25. So like they're pricing you into adoption where you are going to have to do things less and less manual. If you want manual help for anything, it actually costs more money nowadays because they don't want you to do it. You're going to be priced into adoption. So all I'm saying and all I hope you do is just literally choose to get on a different path. I've shown this thing a million times. It's the perfect descriptor of where you are right now and where you want to be and what happens in the future if you don't just choose to get on a different path. So here's where you are right now. You're right here making this decision. Should I do this or not, right? And all I'm asking you to do, because the gap is very small right now, I'm asking you simply to take one step towards learning more about automated trading and bot trading. Because once you take one step, you get on a different trajectory, right? Where you go in and maybe find one trade idea. Just explore it. Just like figure out how you can find a trade that meets your criteria versus going around and picking and choosing random trades because you heard somebody talk about a trade before and you kind of think that that's how you trade, right? But find a trade that will lead you to then building an automation. Then you build a bot, then you have a bot portfolio, then you connect and share with the community, and you basically get on this momentum path, right? And it starts off very slow, but the steps right now are very easy. Like it's just explore it and see what bot trading and what automated trading, could do for you or how it works, right? But if you're like most people, and I hope you're not, then you probably get on this drifting path, which sounds something like this. We've all been on it at some point for different things, right? I'll do it later. It's too hard. Crap, I forgot about that thing Kirk talked about at the, Tradier Summit. Oh, there's too much to remember. I don't have time. And then you give up, right? And that's it. And that's what most people do is they give up. But the longer you wait, the wider this gap becomes. Because while you're doing this, there are 10,000 traders who have already started on Option Alpha. We've helped them trade over $1.5 billion worth of contract volume. People are doing this now at scale, at a lot of scale. So if you are not there yet and you're not using this, you're starting to miss the boat. The tide is going out on you. There's a couple quick reasons why it's so important that bot trading is going to dominate. One is the collapse of latency. So the time between attaining information and that information being used to price the market is almost non-existent. And here's an example of this. This was the best example that happened. It was like a month and a half ago or so. Lyft, right? Do you guys remember what happened? So Lyft published their earnings and they had a typo in their earnings, and AI machines were reading their earnings report, read the typo incorrectly, which the typo was that they had a adjusted EBITDA margin expansion of 500 basis points, but it was a typo, literally 1-0 typo. But because AI machines were reading that and then adjusting and trading it, Lyft took off, right? And it went from $12 to $20 like that. Now, when somebody caught it, it went back down. And so now you're seeing like latency is almost zero. Like there's no information arbitrage that you could possibly capture as a trader. And by the time it gets to you, something has already traded it and it's moved so much faster. The second thing is the explosion of choice. So more choice allows rapid movement of investment capital between markets. Now, remember, back in the day, if you're an OG trader, you used to have just monthly expiration options, right? Then they released weekly expirations. We're like, oh my God, now there's a lot more choice. Well, now they're releasing daily expirations for everything, right? So now this explosion of choice has allowed capital to very quickly move from Friday to next Thursday, and next Wednesday to 3 Saturdays from now and back, or whatever the case is, right? You know, like capital can move so fast between markets that it creates a lot of volatility, and pricing is there for something and then gone. And if you're not taking advantage of it or have something that can take advantage of it, you're just missing all these opportunities all over the place, right? Here's just a chart here you can see from the OCC too of just the absolute explosion in weekly and daily contract. It's just insane, right? Like the number of choices that we have is insane. The other thing that we're going to start to see more of, I believe, is we're going to start to see more 24/5 trading. In fact, imagine a world of 24/7, 365 options trading. I don't know, maybe it's far off, maybe it's not too far off, but imagine if the markets eventually get to the point, and I think they will, where the options market is open all day, all night. Like there's no reason, like at that point, you physically can't stay up enough to watch the market. You're going to be required to have something watched just in case the world doesn't blow up overnight and crush your portfolio. So if we have this explosion of choice and we have even more access to markets around the world, 365, 24/7, it necessitates the need to have something watching for you or managing or helping out because you just can't physically do it as a human. And the last thing here is that agility is vital. Investment agility is comprised of the flexibility of your portfolio and the ability to change entire strategies at a moment. The problem with many traders is that you are still a one-trick pony to some degree. Like, why are you still trading meme stocks, right? If that's your thing, like it's really hard to then wait and find a better opportunity and hope you nail it, right? If you're a one-trick pony trader, it's like time is ticking for you. Right? This is probably some people, it's like, you're my one and only strategy and I just love you so much. And I get it. You understand every little intricacy that's a part of your strategy. You get every little like part of it and every little nuance and whatever. But the reality is that trucks and cars replaced horses because they were more flexible and agile. They could go places horses couldn't. They didn't require the care and the maintenance and whatever. And so you could use this chart and kind of overlay like horse trading as essentially manual traders and the automobile as bot traders and automated traders. And like, it's going to overtake them at some point. It's going to happen rather fast. And so if you're a one-trick pony, I'm telling you, you're skating on thin ice. Your strategy could be here today and gone tomorrow. And here's the analogy for this. If you guys ever remember this was Volmageddon back in 2018. If you traded through this event, you remember it happening. If you didn't, you should look it up in Volmageddon. But it was a period where the VIX essentially went from 10 to upwards of, I think, like 40, 45 in about a day, right? Huge event. In that time period, XIV, which was an ETN, completely disappeared overnight. Had a market value of $2 billion the week before. Strategy that had been around for a long time in a single event was gone, disappeared. So if you have a one-trick pony strategy that you're like, this strategy is working and I love this strategy, that's great. But just understand you're skating on thin ice because it could disappear overnight. Because this ETN, this XIV disappeared overnight and was worth $2 billion. And now it doesn't exist anymore, right? If you look at like other ones, like you might say to yourself, well, I could just buy and hold, or the market always goes up. Not true. And I would say that we're probably in that same paradigm right now where like it seems easy to just buy and hold or the market always goes up. But that's what happened here. Does anybody know what this market was? If you can just add in the comments or whatever. Yeah, this was the Nikkei, right? And after that point in 1989, it took 34 years for the market to get back to the same level. Now, I'm not saying we're going to go through that exact same thing, but we could, right? Like we're so complacent to believe that markets will always do what they do here because that's what happened. And for the sake of argument, that's what happened in Japan for about 40 years, right? But until that point, about 40 years, right? And so until that point, nobody knew any different. And what if we're at the same point right now, like where we need a different strategy? We have to be able to move nimbly from strategy to strategy. And that's what you have to do. You need something that you can turn on and turn off. That if you're trading a strategy and you need to move to a new market, you can turn something off and turn something else on without having to be a one-trick pony that has to relearn everything all over the place. And that's why bots are going to be so important and will continue to dominate the options market. Remember, you have a choice here which path you want to be on. You either want to be on the path of gaining momentum and getting on this adoption curve because it's coming, it's here, it's going faster, or you can just forget about it and you can continue to drift. And that's okay, that's your choice. But I'm telling you, the momentum curve is a lot easier to get on. It just takes one step. Just try to start to explore automated trading, bot trading moving forward. I think you'll really appreciate that in the future. So again, the path is long. It's a windy path, but I hope you guys really enjoyed it. It's a really fun one. So